When Michael Burry places a bearish bet, markets pay attention. The investor made famous by The Big Short is known for being early, stubborn, and occasionally spectacularly right. So when filings revealed that Burry had taken a significant put position against Palantir Technologies, PLTR, a familiar question resurfaced. Does Burry know something the rest of the market doesn't? The short answer is probably not in the way most people think. The longer answer is far more interesting and far more uncomfortable for complacent investors. What Burry is actually betting on. Burry isn't issuing public warnings or leaking insider information. His view appears through put options, a structure that profits if Palantir stock falls by a certain amount within a specific time window. That matters. Options are timed, asymmetric bets. This isn't a declaration that Palantir is a bad company. It's a wager that expectations embedded in the stock price are too optimistic relative to risk. Burry has repeatedly warned that parts of the market, especially AI-linked stocks, are priced for perfection. Palantir, often marketed as a core AI beneficiary, fits neatly into that category. Why Palantir is a natural contrarian target? Palantir is not a broken business. It has real customers, deep government relationships, improving profitability, and strong narrative momentum. That's precisely why it attracts skepticism at elevated valuations. PLTR trades at multiples that assume sustained high growth, expanding margins, continuous AI enthusiasm, and favorable macro conditions. That combination leaves little room for disappointment. History shows that when story-driven stocks stumble, valuation compression can be swift and unforgiving. Burry doesn't need Palantir to fail. He only needs growth expectations to cool. The AI bubble parallel. Burry has compared today's AI enthusiasm to past speculative cycles, not because AI lacks value, but because markets consistently overprice transformative technologies in their early stages. The dot-com bubble didn't collapse because the internet was useless. It collapsed because expectations raced far ahead of cash flows and business reality. Palantir sits at the intersection of AI hype, government credibility, retail investor enthusiasm, and momentum trading. That makes it powerful on the way up and vulnerable if sentiment shifts. Does this mean a crash is coming? Not necessarily. Short positions, especially via options, are often tactical rather than prophetic. They can serve as hedges, volatility plays, or expressions of relative risk rather than outright doom calls. Burry has been early before. He has also been wrong on timing. His edge is not clairvoyance, it's identifying asymmetry, moments where downside risk outweighs upside reward. This trade says more about market fragility than it does about Palantir's balance sheet. What Burry likely understands better than most. Burry's advantage isn't secret information. It's perspective. He understands that valuation matters most near peaks, liquidity shifts faster than narratives, crowded trades unwind suddenly, and consensus optimism is rarely a margin of safety. When everyone agrees on the future, the risk isn't being wrong, it's being positioned the same way. What this means for investors, this is not a call to short Palantir. It is a warning against certainty. For investors holding PLTR, the real questions are simple but uncomfortable. How much future growth is already priced in? What happens if AI spending slows? What if rates stay higher for longer? What if sentiment turns before fundamentals do? Burry is betting that something gives not necessarily the company, but the valuation. Bottom line, Michael Burry likely doesn't know a hidden secret about Palantir's operations. What he knows, and what markets often forget, is that markets don't punish bad companies. They punish bad prices. His short is a reminder that in hype-driven markets, the greatest risk isn't missing out. It's assuming today's story will still be believed tomorrow.